Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at the bigger picture view and why each year the Bitcoin price seems to surprise us. But when you look at the bigger picture view, we should not be surprised as to what happens at the end of each year. And as per the title of the video, this is the Bitcoin chart no one seems to be ever watching. I'll also have a look at what's in the news regarding the ETFs, which we can look forward to over the next few months. I'll have a look at the 60-day cycle to see exactly where we are in the cycle and what we can look forward to over the next cycle that's upcoming. I'm also going to have a look at why your decisions today will define your tomorrow and why it's important to make sure that you're aware of the potential opportunities that Bitcoin and the wider crypto market gives. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to start off with the BLX chart on the monthly time frame and zoom out to have a look at exactly what's happened since the inception of Bitcoin to currently where we are and where we expect to be in the next 2 years. Now you're probably wondering what these white boxes are along the way here. But before I tell you that, let me tell you that the red lines are the halvings. As you can see, we're coming up to the halving next April, and the yellow lines are the tops of the previous 4-year cycles, as you can see here. And this is where we're expecting the next top to be at the end of 2025. So what is so special about this particular chart? Well, these boxes represent the last 2 months of every year since Bitcoin started back here, because a certain pattern seems to be developing every single year. So we'll have a look at the first 4-year cycle, and I just want to do this as an overview because you'll notice something, that November and December either mark the top of the market or the bottom of the market, or the beginning of a parabolic move. So if we look at the first 4-year cycle here, so within this 4-year cycle, we had the beginning of Bitcoin over here, and then after topping out, the next November and December was a bottom of this trend here. And in the 3rd year, this particular November and December back in 2012 marked the beginning of this parabolic move to the end of that 4-year cycle. And since that first 4-year cycle, we seem to have had a repeat of that cycle every single time since then. So once we topped out at the end of the 4-year cycle, the first year, the first phase of the next 4-year cycle was a bottoming out of that phase. So the November and December was virtually at the bottom of that bear market. I'm going to leave the 2nd year alone for the time being, but if you look at the 3rd year, that's always around the halving, and always when we come to the top of the previous all-time high, just like over here. So in 12 months time, this is what we can expect, but also it's the beginning of the final phase of the bull market. But it always seems to mark the beginning of the parabolic move, just like here and just like previously. And in the next cycle here, once we topped out, again, November, December, we bottomed out. We'll leave the 2nd year alone. The 3rd year marked the beginning of the parabolic move to the top of that market. And in the current cycle, we're repeating exactly the same one more time, having topped out here in 2021. November, December was the bottom of the market, and the 3rd year is going to be exactly at the all-time highs over here, and this will be the start of the parabolic move to the end of the 4-year cycle in 2025. Why have I left the 2nd years alone here? If you look at the first cycle, Bitcoin only just started here, so we can't take the first 2 years as anything of significance or importance. But if you look at the 2nd year, even here, we didn't go back to touch the bottom of the previous year. And this similarly happened one more time in 2015. The 2nd year was really confirmation that we'd bottomed out at the previous bottom, that this is not going to fall below this line here. Then the next cycle, one more time, although we came down to nearly the bottom, we still created a higher low from here. And currently, the reason why I'm saying this is because there's a lot of bearish news out there from various people who still think that we're going to come back below this 15,400. But the evidence in the chart suggests that we won't be going back to the 15.4. We could come back to the 20, as I mentioned over the last few videos. But this red curve you can see all along seems to always play out that we shouldn't be going below this red line here, this red curve. So always keep this big picture view. So this is a chart nobody seems to be watching. All the bears who are actually predicting the fall of Bitcoin to much lower levels, down to 12, down to 9, down to 6, down to 3, they obviously don't see this chart at all. And they're being driven by the emotions of the market at this point here. So what we can look forward to in November, December this year is similarly to what's happened over the last 12 years, that either we're at the bottom of the market, or we're at the start of a parabolic move, or we're at the end of the 4-year cycle. And this is repeated all the time. Bottom of the market, confirmation of the bottom from over here, start of the parabolic move, end of the 4-year cycle, end of the bear market, confirmation of the end of the bear market, start of the parabolic move, and then the top of the market. And currently this is exactly the same cycle one more time. The bottom of the market, confirmation of the bottom of the market, and next year, from October, November, December next year, we're going to have the beginning of the parabolic move to the end of this cycle over here at the end of 2025. So the same pattern develops over and over and over again. And anybody who says that this time it's different should have a look at this particular chart. Okay, I'm just going to move on to looking at a certain pattern that's been developing, which I've alluded to over the last couple of videos. And I think we should be aware of this because this could really play out. And while we've just had a good rise this morning of the Bitcoin price up to about 27,900, we need to be just cautious here and not get taken in by some of these sudden movements that we're getting now and then. So what is this pattern that's been developing that we need to be cautious about? Firstly, what we've got is a very strong neckline, as everybody knows, around about the 25,200. And above that, we've got a very strong neckline at around about the 31,000. And as I've shown you many times, what this formed was an inverse head and shoulders pattern over here. And usually, at the end of a very strong, brutal bear market like we got here in 2022, this particular pattern would normally break out to the upside with the measurement of taking it from the bottom of the head to that neckline. And that would give us the measure of what this pattern normally plays out to. And that would have taken us to around about the 40,000 plus mark here. But the evidence in the charts tells us that we topped out at the 31,000 and that this pattern did not play out, not yet anyway. We've ended up creating the mirror image of this particular chart pattern above that 25,000 neckline over here. And that is that we've got the left shoulder, we've got the head, and what we've just done now recently, when we came up to that 28,500, we've created the right shoulder here. What could quite easily happen here is that we could have a completion of this right shoulder, which would mean that what we were expecting over here to map out at the top here could happen on the reverse side, on this side of the chart. So if we take that measurement from the 31,000 to the neckline of the 25,000, you can see that over here, once we break this, it would take us all the way down to around about $19,500. So something to be aware of, we are completing this particular right shoulder here. Yes, we've had a nice rise this morning to 28,000, but this could easily be a fake out here. So what we have to be really worried about is the fact that since we topped out at the 31,800, what we've really created is a lower high, another lower high, and then we had another lower high here. So we've now just jumped up to about 28,000, and there is a danger that we could end up creating another lower high over here. So until we break this particular trend line, we have to be very cautious not to get rejected at this point for a run back to the downside and creating that right shoulder here at the neckline of the 25,000. What could easily happen is a move back up to retest this level here at around about the 28.6 level, or even get to the lower end of this level here at around about 29,000. So be prepared to get all the way up to 29,000 and get rejected at that point here. So just a word of caution about what's happening currently. When you look at the bigger picture of what's happening on this weekly chart, we are on this trend line here, and we've just come in to retest that. And if you put the simple moving averages on the weekly chart here, you can see that the green line is the 200 simple moving average, and that's currently at around about 28,200. And the yellow line, the 21 simple moving average, we've just got rejected at this point at the moment anyway. So you can see there's a lot of resistance around these levels. Yes, we could wick up all the way up to the 29, but it seems to me anyway, with a high degree of probability, we're going to get rejected. I don't see it go and hit the 31,000. A lot of people talking about the ETFs and what's happening with the news that came out last Friday, where the SEC did not appeal the court decision on the Grayscale Bitcoin ETF. So that was their deadline, Friday, midnight, 13th of October. So now the SEC has a decision to make, either come up with some fresh reasons to reject the Grayscale ETF, or more likely to give them the green light for their ETF, as well as many of the other applicants that are waiting in the wings. And a similar story in the Cointelegraph showed us that what we can really expect over the next few weeks. The fact that they failed to appeal on Friday means that a dialogue should open up between Grayscale and SEC beginning this week now. So this week and next week, there should be some sort of a dialogue going on between the Grayscale and the SEC to come up with some sort of a working pathway to either reject or to accept an ETF for the Grayscale. And as I mentioned last week, because the SEC wouldn't want to give a first mover advantage to any one company, the chances are that by the middle of January, we're going to get all of the applications approved all in one go. So we'll see how that develops, but certainly this week and next week, there's going to be some movements here. So you will get some information coming out in the press. And if we move a little bit further lower, we can see what the developments could possibly be. And it goes on to say that if the SEC were to deny the application, Grayscale could then appeal that decision. Obviously, that would be dragging the process out even longer. And what we have currently is about 7 spot Bitcoin ETF applications which have been put before the SEC, and they're waiting for those decisions from the regulator. And as I said, that's due to be around the 10th of January next year. And there is an expectation now that there is a 90% chance that a spot Bitcoin ETF application will get approved in January in 2024. So we'll just have to wait and see, but certainly very good developments. But what we've got now is to navigate through this market in the middle of October all the way up to January. And we don't know what's going to happen between now and then. Okay, I just want to show you a chart, which is the 6-month chart, which not many people look at, but something that looks like a very high probability play, so that when we come to our first expected peak, which I said before many times, based on the pi cycle here, and this currently is at around about 49,000. And that just happens to be exactly where the previous neckline is over here. So if we draw a neckline, we can see that there's going to be some sort of a correction at this point here, between 45 and 49,000. So when we do come up eventually here, this is where there is a very high degree of probability of getting rejected for a big pullback down. So just be aware of that 6-month chart. Not many people look at this time frame. And when you look in hindsight, you can see that this particular chart here was giving the game away with this gravestone doji candle that we may well have topped out here. And this was back in April when Bitcoin was about 64,000. So always keep an eye on the 6-month chart. This is where we can expect a correction at around about the 45 to 49,000. Okay, moving on to the 60-day cycle. Very, very important here, because what we've got is that we've just had a nice little rise back up to the 28,000. And we can see that the red line here, the end of the current 60-day cycle, the market normally comes down into the 60-day cycle here. So what we've got to do is have a cautious approach. And as I just showed you, that we could well, having made lower highs along the way, we could well make another lower high on this trend line. And this could well be the point where we come back down into the 60-day cycle. So very important to know exactly where the 60-day cycle is. And this cycle ends around about 21st of October. And currently, from the end of the previous cycle, we're on day 55 of this current cycle. So we are very much within the realms of the end of the cycle coming up. And usually towards the end of the cycle, we should get one major capitulation down here. It doesn't have to happen. And if we move higher into this, could well be very, very bullish to go to the upside. So you just need to be aware of that. The probability is always on the downside at the end of the 60-day cycles. So what I'm saying is that it's always dangerous when we get deeper into the 60-day cycle, because we normally get a flush out at that point. As we've seen already at this point, look, we got a flush out here, this point got a flush out here, this point got a flush out here, etc. So it's usually at the end of the cycles that you get a good major flush out. And what we've got really is that the bulls have bought up at these levels in the past so far. So this 25,000 is a strong support line, but we also know that when the support line is being tested multiple times, it becomes weaker with a move to the downside. So we need to just be aware of that. So if we just have a closer look over here, this red line is where we would be expecting the ETF decision on the 10th of January here. But as we know, the markets will start moving well before this. And between now and January the 10th next year, we've got one more cycle here, which could well take us down to these levels down here in the 20,000 mark. But if we don't break this 25,000, this could be the sideways consolidation that we needed in order to create very good structure of the market for the move to the higher side. And this move would be quite explosive once we get these ETF applications approved. So this is our target here at 49,000 at the moment with this pi cycle. And as we know that we normally come to the pi cycle before the halving. So this is what I would be expecting, that before the next halving, before April, we should start making a move towards this $45 to $49, $50,000 mark here. So this is what we've really got to keep our minds and focus on. And if you're new to the Wisdom Bites channel and you don't know what I'm talking about in terms of the first peak, if we go back to the first cycle before the halving, the price action having bottomed out here came up all the way up to the pi cycle, the red line here. And in the second cycle, exactly the same. Before the halving, we came up to the red line twice over here in the next cycle. And in the third cycle, exactly the same one more time. We came up right to the pi cycle there before the halving. So this is what we're expecting in the current cycle. Having bottomed out here, the next move will be to the pi cycle top here. So before the halving next year, this will have to move towards the pi cycle. Wherever it meets, there will be a correction, as has been the case historically. So if the previous cycles are to be believed, then this is what the price should be doing over the next few months before we get to the halving. So in terms of my strategy, which I've been sharing with everybody on this channel, from all the way back here at the bottom of the market, my view is that I want to be aboard the train when the big ETF decision anywhere around January the 10th comes along, or even before then. So while the price for Bitcoin could quite easily go further down, like I said, at the end of this 60-day cycle, it could even go down to the 20,000 down here. So for me, as a long-term investor in the Bitcoin miners, if the Bitcoin price does go down to this level, the short-term fall in the value is well worth a higher long-term value over here. So you can see that the bigger move is to the upside from where we are. And while this is very painful to ride it all the way down here, but if we take the 4-year cycle view, and not everyone can handle this, unfortunately, and this is why we have to take a 4-year view, and we're in the second year of that 4-year cycle with 2 more years to go. And if you're feeling anxiety at the potential of this fall that could come in the next couple of months, I'm not expecting it, but it's obviously possible. The probability, I think, here would be around about between 20 to 25%. But if you're feeling anxiety, then it may well be that you need to reduce your position sizing and take some positions off the table in order to reduce anxiety. Normally when people are very worried about big falls, it's because they've got too much invested, and that's why position sizing is very, very important. And it is my view that once there is confirmation of the ETFs, anywhere between where we are to where we expect the decision to be made around 10th of January, whenever we get the confirmation of that, that move will catch everybody by surprise, and we may end up getting a very big one candle move, which could vary from anywhere like 3,000 to 10,000. So anybody meddling around with their portfolios here is more likely to get caught out, unfortunately. And I really don't want to miss that. But everybody has to make their own decision. Okay, going on to the dollar, just a quick word. We've had a print of this doji candle here, the gravestone doji candle, which I alluded to last week in last week's video. And usually this marks the turnaround for a move to the downside, as happened here when I mentioned it at that time, that we can expect the market to come back down. So this is one more sign that we're now getting towards a turnaround in the Bitcoin price. That over the next few weeks and months, we can expect the dollar to be coming down, and the markets all to be moving in the opposite direction. So just going back to the strategy side of things, just want to share my thoughts with you on this, and that is that this is the timeline we've got from the current position here. So my expectations are that we're going to be breaking the previous all-time high of 69,000 around October 2024 here, past the halving in April next year. So this is where the timeline is. So somewhere along the line, it's going to start moving up towards breaking that all-time high. And this is why anybody who's taking a bearish view, while you could obviously be correct, and as I've shown you from the previous historical perspective, that the November, December of the second year is usually the confirmation that we're not going to go back end of the bear market lows over here. So that was the reason why I was showing you that, because of the confirmation that's coming up in November, December this year. So that'll be the end of the second year, which confirms that. So what can we expect in terms of the rise in the Bitcoin price? If we have a look at from the current level, just to get to the previous all-time high of 69,000 would represent 1.5x, so about 150% increase. But we know that the tops of the predicted price that we've got is around about 150,000. So anywhere from about 100,000 to 150,000. This looks like a good ballpark figure of where we could end up. And that would take us to around about 4.5x. And at the bottom of that range would be around about 2.7x. So between 2.7x and 4x is where we're expecting the Bitcoin price to top out in the next 2 years. And why your decision at this point is critical in terms of getting that gain is that there are opportunities with the Bitcoin miners which are a leverage play on the Bitcoin price. And with the ETF decisions imminent, and all expectation is that we will clear the Bitcoin $69,000 all-time high by the end of 2024 over here. So 1 year from now, we should be hitting the 69,000. So if that is going to be the case, then imagine what is possible with the Bitcoin miners. For us to know what is possible, and especially after the halving, we can look back at the history of what happened after the last halving with some of the Bitcoin miners. If we start off with Bitcoin, from the previous halving back in May 2020, the Bitcoin price from the close of that candle there to the top of 69,000, the Bitcoin price increased by 6.3x. That's 635%. While one of the Bitcoin miners, Marathon Digital Holdings, from the close of that candle to the top at $84, went up by 117x. So that was a leverage play of 18 times. If we have a look at Riot Platforms, from the halving here to its top, that was in February 2021, that went up by 35x. So Bitcoin 6.5x, Riot Platforms 35x. So that was a leverage play of about 5 times. Another miner that was around at the time, Hut 8, that went up from the close of the candle at the halving to its top. That went up by 12x. So that was a 2 times leverage play on the Bitcoin price. And finally, Bitfarms, from the halving to its top over here, that was a 27x. So that was a 4 times leverage play on the Bitcoin price. So we can see the pattern is the Bitcoin miners are a leverage play on the Bitcoin price. So while we expect Bitcoin to go up by about 2.5 times between now and the end of 2025, based on the historical perspective, we can expect the Bitcoin miners to be going up by much, much more than that. Anywhere around 4 or 5x, all the way up to 10 and more. Unfortunately, most people will wait until the big moves are over before climbing on board when it's going to be too late. So if you're interested in the Bitcoin miners and the potential they offer over the next 2 years, remember we're in the last 2 years of this bull market, and I've shown you what the potential is based on the historical perspective. So if you want to catch the big moves as they happen, which we're expecting over the next 2 years, yes, there will be oscillations to the downside. You have to have the nerve to be able to carry some of these positions down, like we're currently down about 60% on the miners at the moment. But if you've got the nerve to do that, and you want to join and you want to have the potential to rise with the Bitcoin miners as the price for Bitcoin goes up over the next 2 years, then all you have to do is click the join button below any of my videos over here. The price is £12.99, and what we do is we focus on the Bitcoin miners with an exclusive video every Wednesday and also bonus videos in between. We also do a market update, usually on a daily basis, and we cover mostly the long-term opportunities with Bitcoin, which I've just shown you, as well as the swing trades when they present themselves to us. based on the 60-day cycle. So for the price of a coffee per week, it opens up the opportunity for a leverage play on the Bitcoin price over the next 2 years. Okay, we'll leave it there. Hope you found value in the video. If you did, then please remember to click the like button and to subscribe if you haven't already done so. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.